Hello, my name is Representative Pam Powers Hanley, and I represent LD9 in Tucson in the Arizona House. Well, today's video is another RTS alert, and today we are talking about HB2113, which is on the Ways and Means Committee agenda for Wednesday, January 20. And so I am on two different committees this year. I am the ranking member on the Commerce Committee, and I'm also on the Ways and Means Committee. So it's all about money this year as far as my videos are concerned. And so a couple days ago, I did an RTS alert about the Commerce Committee having a tax cut for the telecom companies on the agenda for this week. Well, in Ways and Means, we have a tax cut for rich people on the agenda for this week. And on neither agenda includes anything that would directly help the people of Arizona or local small businesses with the pandemic. We are pretty much tone deaf to the pandemic needs of the people and local small businesses in the legislature, at least at this juncture. So anyway, HB 2113, this allows people to deduct more money in charitable contributions on their personal income tax. You might remember that with the Trump Tax Cut and Jobs Act, which was passed in December 2019, it changed our tax code dramatically. And one of the things that it did do was that it simplified the tax code a little bit in that it raised the standard deduction and also eliminated a lot of itemized deductions. Okay, so one of the deductions that was tinkered with was on the personal income tax was the charitable tax deductions. And so there have been pushes to, bring that back on the state level in order to mitigate the losses that the rich people, suffered on the federal level. And so it's been brought back some. It's a very complicated story, and I can't go through it in 2 minutes on a video. But suffice to say that this allows people to deduct even more charitable contributions, and it tags it to inflation, but it also says it'll never go down. So as inflation goes up, they get to automatically deduct more, but if inflation goes down, their deduction doesn't go down. It just keeps going up. And so I don't think that in a pandemic we should be lowering revenue, because this is basically lowering revenue. The first year it's estimated we'll lose about 2 million or so, but it's going to keep going up essentially. The other thing that I think is that if we're going to be investing money in something, we should look at the needs of the people of Arizona. And I think the rich people are doing fine. And so I think that we should look at, raising our stingy unemployment. We're the worst in the country for unemployment. Raising our stingy cash assistance to the poor. Stopping evictions, fully funding the Housing Trust Fund. There are a lot of places to put our money besides in tax cuts for the telecom companies or for rich people in the state of Arizona. So if you're on request to speak, I would suggest that you say no on 2113. It's time to invest in Arizona. It's time to help the people of Arizona, because our pandemic response has been dismal. We have a lot of people who are hurting, and that's where the legislature should focus its attentions, not on giving tax money away.